Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Welcome back from the weekend. Today is Monday, January 5th, 2009. We start with some fundamental data from Europe. The Sentex Investor Confidence Index snapped a 7-month streak of declines to post its first improvement for the January period. The index rose to negative 34.4 from its record low of negative 42.3 in December. Investor sentiment was boosted by interest rate cuts and government measures that should work to stimulate the Eurozone economy. In Switzerland, meanwhile, the SVME PMI also rose from its all-time low following 8 straight months of declines. Expectations were for a lower reading. Still, a figure below 50 represents contraction in managers' purchases. In the UK, the construction PMI fell to 29.3, reflecting a deepening of the contraction in that sector. With the housing market reeling in the UK, the construction industry has gone into hibernation. In the US, construction spending for the month of November fell 0.6%, but this was better than forecast. The report showed that gains in the commercial and government buildings partially cushioned the slump in residential real estate. Turning to our market highlights for the day, we see a very sharp drop in the euro-dollar pair, amounting to more than 400 pips from high to low. The main theme today that fueled dollar strength was speculation that President-elect Barack Obama's fiscal stimulus plan will help the U.S. recover from its recession. More details were released about the plan, including a larger than expected amount that will go towards tax breaks for individuals and companies. The euro-dollar pair slid from its high near 1.3960 to test 1.3550. That put the pair at a 3-week low. The euro also suffered its biggest one-day loss against the pound since its inception, also a slide of nearly 400 pips. Such a sharp fall will most likely stall the pair's climb to parity, which we saw the last couple of weeks. Expectations increased that the ECB's hawkish language about slowing down their pace of interest rate cuts will be altered as negative news poured in from the Eurozone and inflation keeps slowing. Comments from the ECB vice president echoed those sentiments. The pound was boosted by plans by Bank of England Governor Mervyn King to expand the £200 billion program that allows banks to swap illiquid securities for government debt. The pound-dollar pair rose about 270 pips from its low in favor of the pound, making the pound the strongest currency out of the 3 we have mentioned so far. The pair has established a clear line of support near the 1.44 level and is now moving back into the consolidation zone we saw 2 weeks ago between 1.47 and 1.48. The dollar-yen pair shot up 150 pips today, mainly in European trading as stocks in both Asia and Europe advanced, increasing risk appetite. Commodities were up, helping oil producers' shares. Today's gains put the pair about 230 pips higher than the resistance turned support level near 90.90. U.S. equities traded back and forth in New York morning trading, but fell into the red as figures on domestic vehicle sales rolled in. That stalled the greenback's gains near 93.50. In our final pair, we focused on the US dollar-Canadian dollar, which saw a steep drop as oil prices rose. By the New York session, oil prices were up $2, putting the price of a barrel at $48.50. The Loonie took advantage, gaining almost 325 pips in New York trading after hitting a high near 1.2225 prior to the New York Open. The fundamental docket heats up for the next trading session. Tonight, we get services data from Australia and services data from the Eurozone and UK overnight. The UK will also post housing prices data, while the Eurozone releases its flash estimate of annual CPI. Tomorrow, Canada releases its Producer Price Index, and the US has 4 key releases: the ISM Non-Manufacturing Index, pending home sales, factory orders, and the FOMC meeting minutes. And that wraps up our broadcast for the day. Thank you for joining us here at CMSFX.com, and happy trading.